Happy weekend, traders. This is Trader Geek Sam with your Sunday, March 15th, 2026 market review and preview video. Hope you're having a great weekend and starting off a little differently here. So when the market gets volatile and you want to figure out what's maybe going on or what the futures open pretends on a Sunday evening, I come to Weekend Wall Street. Very rough or crude idea. Right now it's showing a Dow opening down 82 points. Nothing elaborate, nothing crazy about this. So last week when I looked at this, it was showing about down 385 points at the open. It turns out we were down about 500 or 600 at the open. Just to kind of get an idea, I also take a look at what Bitcoin is doing over the weekend, and if it's down or up, it kind of gives an indication of risk sentiment. And it looks like we're up about 1% from Friday's close. So a good sign that we're not going to have a big gap down at the open of futures, but that's about 42 minutes away from the time I'm recording this. We'll see if that comes out to be true. Let's take a look at what we dealt with last week and doing our normal weekly review of the major markets and other sectors and industries. Looking at Friday, it was pretty much a down day for everything except Bitcoin was up 1%, and the dollar is still showing strength, about 0.75%. At the bottom of the list, you have the Mag 7s losing 1.66 and gold giving up 1.33%. So the correction to the upside of the big down move at the end of January is looks to be resuming. Micro caps down 1%, and the Qs were down 0.6% on some late day weakness. SPY was down 0.5%, and the best of them in terms of the equities was the mid caps. For the week, Bitcoin did gain 4.5%, surprisingly, given the weakness in the overall market, and the dollar gained about 1.5%. High yield bonds losing 0.6, but the VIX surprisingly was down on the week from 29.49 to 27.19. Go figure. We have the gold losing 2.68% and the TLT, the 20-year bonds down 2.17%, as are the mid caps. The Dow quickly moving away from that $50,000 level. So not looking terribly great. Microcaps down 1.75%, and on the week, the SPY lost about 1.5%. Q's a little stronger, only losing 1% on the week. For the month of March, which is just about 2 weeks old and essentially half done, we have the VIX, the big winner, up 37%. Bitcoin, believe it or not, is up 8.5%. It sure doesn't feel like it for some reason. The dollar is up 3%. And then everything else, all the major markets are down, with the mid caps, their early year-to-date strength giving up the most, as are the small caps and the micro caps. So the smaller caps are giving it up faster than the rest of them. DIA, 4.75, gold just about the same, 4.75, TLT, ditto, and VTI, the total stock market index, down 4%. So the first half of May not living up to its seasonal strength so far. If we look at year to date and quarter to date, which are essentially the same for the first quarter, VIX is the big winner, up 82%, and IAU, the gold, still up 16% despite last week's weakness, and the dollar, everybody calling for the death of the dollar, and it's up 3.18%. So showing strength in geopolitical conditions, as is normal that we see during these kinds of war times. Micro caps up 1.5%, and mid caps still hanging on to a 1.28% gain, but far from last week where it was about 6%. Micro or the mid cap or the small caps, he tried to say, just barely flat on the year. At the bottom, Bitcoin, despite this recent strength, is up down 19%. Magnificent Seven, all of them in the red, down 9%. Q's down 3%. DIA down 3%, and so is the SPY and the total stock market index. So we are about 3% down year to date. Nothing unusual in a market that's basically down about 5% from the highs. And historically, you can count on average 2-5% pullbacks per year. Looking at the sector strength on Friday, kind of mixed bag with utilities and telecommunications and staples up 0.5%. Energy making another record high last week, up 33 basis points. Real estate up 0.25 point. Metals and mining sinking with gold and silver down 3.35%. Materials going along with that, as did technology, communications, and consumer discretionary. For the week, most everything was down, with energy being the only outperformer, up 2%. Utilities less than 0.5%. But at the bottom of the list, transports, retailer stocks, financial stocks, consumer discretionary, industrials, and we have communications. So lots of red on this board. Only 2 sectors that were truly in the green for last week. So far this quarter, we have XLE up 29%. IYZ, this is the telecommunications, up 15.22%. Utilities up 10% year to date, and staples still up 9%, despite their recent weakness, and materials up 8.47%. Industrial still up 6%. At the bottom of the list, financials can't find a bid, down almost 11%. Call that correction territory, whatever the heck that means. XLY, 7.16%. Those are consumer discretionaries. Retailer stocks down 6%. XLK technology down 5%, and XLV 3.25%. I may have skipped over the month of March here, and the only positive sector for the month of March so far is energy, up 3.18%. The worst of them is the transports, which were showing a lot of strength. But some of these transports like FedEx, UPS, and Expeditors getting hit on all the geopolitical concerns. And there you go. Looking at the industrials for the week, solar stocks up about 4%. XOP, basically the exploration production's up 2%. Semiconductors rose about 1.75%. Chinese stocks bouncing back 1.5%. Worst of them, GDX, gold miners back under the $100 level. But these have been on a torrent run, and you expect some give back, especially with gold down. ITB, home builders getting hit last week, as were the despite the continuing sound of war drums, you have the ITA. These are the defense stocks giving up 5%. Hot stocks, big shock here, down 4.5%. And software stocks, after a nice bounce, giving back about 4% last week. On a monthly basis, exploration production, as would be expected, highest. Cyber stocks bouncing back 3.56%. The worst of them, GDX, losing so far in March about 20%. And home builders, 13.43%. And robotics down 10% for the month. Year to date, the best of them is exploration and production, oil, TAN, solar. You see solar outperform when conventional energy gets a bit expensive. GDX still, even though we've had a lot of weaknesses, still up 8.73%. Semiconductors up 7.5%, and ITA, which is the aerospace and defense stocks, up 7%. And you got a lot of stuff in the red here. So kind of more than half of the industry is in the red. Software leading the way on the downside, 20.1%. Pot stocks, big shocker, down 19%. They just, when are these things ever going to catch a bid? KWeb, Chinese internet, down 11.42. FDN internet stocks down 10.8. So, just looking at the industries, looking at the sectors, you've got, and you see how mixed they are. And that tells you that we have not seen any panic in the market thus far. When you have such a mixed performance, it just tells you that we are in a garden variety pullback, and we have not seen shock and awe to the downside as far as I'm concerned. And this may be a bounce, as we'll see coming up from some support levels. Mag 7 over the last week, everything in the red except Google and NVIDIA, just eking out about 1%. But the worst of a Meta giving back about 5%, Microsoft 3%, and so was Apple. And if we look on the month of March, again, only two of them in the green, Microsoft and NVIDIA, with Apple the worst performer so far in March, and Meta equaling that bad performance. If we look at year to date for the Mag 7, every single one of them is in the red, with Microsoft being the worst, Tesla second worst, and Amazon third worst. This was supposed to be the year of Amazon. I heard and read so many places, but so far that's not true. But we are only 2.5 months into this year. NVIDIA holding up the best out of all of them, down 3.35%. Google down 4%. So much for the kind of performance and market review. Let's take a look at the charts. If you're new to these presentations, I start off with a daily, weekly, and a monthly chart. I am a top-down trader, so I like to look at the overall indices and what they're doing. And I'll start with the daily chart for the SPX, S&P 500 index. Bearish chandelier, bearish PSAR. Those PSAR is kind of a trend following system, so it's definitely in the red. Chandelier is more of a volatility stop, and that's also in the red. So we have both trend following indicators against us, kind of being in a downtrend. We have MACD that's definitely negative and under the zero line. And we are getting to the oversold level on the relative strength index, the RSI, at the 33 level. So 30 is oversold. And you can see going all the way back, the last time we were close to here was not until April, was not until you get back to last October, when we got down to the 21 level. So we're nowhere near that, but the closest we got in October was at 35. So we'll see if we get a little bit of a divert. Well, we're not, because we're already at 33. So I thought that was, this one's a little lower than the November. You see we're definite downtrend on the daily, below the 150-day, below 8 EMA. Green one is the 21, and of course the 50 days way up here. And we did close outside a standard two standard deviation Bollinger Band, and you could see the rally on Friday was definitely given up, and we closed at or near the lows. We are approaching some support points. 6604 is the 200-day moving average. We usually see a bounce there. We often get a bit of a penetration, panic sets in, and then a bounce comes. Who knows how long that will be, but and how good or how strong that bounce is will be an indication of returning strength or if it takes us up to the 150-day moving average or the 21 EMA or less than that. We do have a head and shoulders play in motion down to 65.48. We also have the November low at 65.21. Those are targets. And for this week, we have about a $212 options implied expected move. And you can see the upper edge is way up here at 68.44 and down at the bottom here at 64.19. So that's about 212 points versus last week's 224 points move. And we didn't quite move at least away from last week's low by that amount, but we sure did have a lot of volatility. In any case, if we can get up to this options implied expected move, I would expect resistance all along this line here. So it's funny that this options implied expected move is right at resistance. That will basically need quite a bit of strength, and then we run into the 50-day. So getting up here within the realm of expected moves, getting up here to the 50-day would be a lot of movement just to get up there. We would need some type of rest before we could bust through the 50-day again. So there you have it. On a weekly chart, we have still a bullish chandelier and a bearish PSAR. And you can see this chandelier stop right here on the green line. See the topping tail on the weekly chart. And we are about, call it 468, 470 points away from our all-time high. And if we break this on a weekly basis, then that's just another feather in the bear's camp, or cap, if you will. Here's our targets, and we have a MACD that is definitely on the downside, on a sell signal, still above the zero line, and a relative strength index that's kind of neutral at the 45 level. Switching to the monthly chart, still have a bullish chandelier, bullish PSAR. We're definitely showing weakness, and the first time we have taken out all 3 months, prior months in terms of their lows. And we have here the November low to contend with, which I said is around 65.21 that I have marked off on the chart there. And if we don't see a bounce there, then there's further targets down below to visit. But so far, the month isn't over. It's only halfway over, so anything can happen. And again, only 5% from the all-time highs. Typically get that twice. MACD looking to flip over the fast line, over the signal line. And we do have an RSI that is breaking the overbought level, which would be expected with all this weakness. But you've seen this movie before. We came down, came back up. We came down, we came back up. We came down, we came back up. So this is any visit down to the 200-day or just below the 200-day will probably find a swarm of buyers, the dippers or what have you. So momentum chasers do not give up that easy, especially when momentum has been as strong and persistent as we've seen over the past, call it 12 months since last April's tariff tantrum. All right. So as far as the NASDAQ go, bearish chandelier, bearish PSAR, you can see we have a downtrend line here and not looking much stronger. It was looking better last week in terms of relative strength, but still couldn't do it. We finally got the MACD fast line, flip over the signal line, and we are below the zero line. A little bit more relative strength than the S&Ps at or near the 40 level. Switching over to the weekly, here we are again. There is the bullish chandelier. We haven't violated that, but the PSAR has definitely violated it. Look at that topping tail on that weekly candle. Options implied expected move for the NDX. It's about 821 points, give or take, for this week. We do have Chairman Powell and his press conference and his buddies giving an FOMC decision on Wednesday. Nobody expects a rate cut. It's going to be all about his comments. And then again, the market may not care if it's still caring about the price of oil and what's happening in the Middle East. Switching to the monthly chart, bullish chandelier, bullish PSAR. We are basically looking to violate the low of February. Let's see if we did that. 24,388. Yeah, we're just below the February lows. Here's the November low. That's the one that matters. 23,854. We don't really want to close below there, at least not for the month of March. There's 2 weeks to go. MACD looking to flip negative into a sell signal but we won't really know the true indication until the end of the month, and that's 2 more trading weeks to go. You can see the RSI is breaking below the overbought level at the 65 level. So still bullish, neutral here, but definitely bearish. Going to call it neutral. The last week really showed that the bulls were no longer in control, but they certainly can regain the baton, to mix metaphors here, over the next week. And there's lots of reasons, from oversold markets to an FOMC meeting, some comments or some basically good action from, or not good action, good comments and information about the progress of the war and where we might step out of it, could send this market flying back, given the conditions. Russell 2000, the small caps, bearish chandelier, bearish PSAR, and a downtrend, no question about it. Again, we got this big bounce on Monday, and looked like we're going to have follow through on Tuesday. NOMAS came right back down, and Friday was not a good day either for the small caps. MACD has been negative and below the zero line, and we are at the 33 RSI level, getting to that 30 level. We got as low as how much here? About 31. So we're about still higher than that low on the relative strength index. Looking at the weekly, bearish chandelier, which just flipped, and then a bearish PSAR. So we have two, a volatility stop and a trend following stop, that are tripped on the weekly. We're taking that out. Look at that topping tail on this particular weekly candle. MACD is on a sell signal now, and we have a middling RSI on the weekly chart. Finally, an ugly stick on the monthly so far. Still chandeliers bullish, PSAR. Any strength we had in the small caps from this year is all but history. I think I showed you earlier that it's probably up 0.5% or 1% on a year-to-date basis. Certainly better than the S&Ps and the NASDAQ. Applied move, by the way, for this week on the Russell is about 103 points, give or take. And we have a MACD that's still positive, and a RSI that never seems to get over. About the last time it was in August, and never got to an overbought level. And now we're heading back to the 58, more towards a neutral level. So call this bullish to neutral. I'll call this neutral, and this is definitely bearish. So the bears are slowly taking control of this market, and it's up to the bulls to try to bring it back. And trust me, they can bring it back if conditions change and the news gets better. We are a mere 5% from all-time highs, and that's typical on a yearly basis twice. Looking at the VIX, we had a VIX that basically kissed the 35.3 level last week. I'll look at the daily chart here first. Here's the Monday where we hit that, but notice that we never took that out, even though the market was lower. So I guess you could call that some type of divergence where the market went lower, but the VIX didn't go higher. We'll see how much that means. Looking at the MACD, solidly positive on the daily, not quite overbought on the daily. And on a weekly basis, you can see that it's not a pretty candle, but still higher than the week before. We could close the week before at 29. I guess we did lose some ground this last week. We went to a higher high, but not to a lower low. But we basically are still in a zone where there's lots of volatility. There's lots of concern. And speaking of which, if we take a look at the VVIX, which is the volatility measure of institutional call buying on the VIX, 131. This is kind of a area of concern. Some might say danger. 131. We want it under 100, and at the moment it's at it closed Friday at 131. Anything over 110 is concerning, and we did not close any single day last week below 110. In fact, our closing low was about 125, 122. So VVIX is showing us that they are not giving up their hedges. I was just seeing them on Friday. They were still coming after index puts on Friday. So they have not given up on the potential downside. So those are two indications. If we switch over here and take a look at the VIX, we do have a VIX futures and options expiration this week. In fact, this is for the overall market a triple witching expiration where futures expire, options on futures expired, and options on equities and indices also expiring this week. So we have all that to add to the mix of volatility that we're seeing. Should be fun. In any case, in 2 days, that's Tuesday is the last time to trade this current week's VIX options, and then Wednesday morning, the current VIX futures contract will expire. We'll take a look, and we'll go out to the next weekly options, the next monthly expiration. And what I like to look at here is the options on the VIX, call options, and the put options to see how they're trading. So let's call it closing at 27, go $1 out of the money. If you were still bearish on the market, you would buy the calls and you would pay $2.68 for them. If you were bullish on the market and you thought the VIX was going to decline, you go $1 out of the money and you would buy the calls, the puts, and those would cost you $4.30. So the edge here goes to the market bulls because the puts are almost twice as expensive, not really, as the calls. So they have the edge, but not much, not by much. Sometimes you will see these 5 to 10 X of each other, and it gives a more meaningful indication. But at this point, with the puts, call it 1.75 times the calls, it gives the edge to the bulls, but it can portend, especially in volatile times, that there's still room for the bears to wreak havoc over here. Taking a look at the VIX contracts, with the spot VIX at 27.49. We have all the back month contracts of the VIX lower than that. And this tells you that we are in what's known as backwardation. You'd expect the further you went out in time that the VIX contracts would be higher. They are not. It means that the risk is here and now. And this is another indication we have to watch to make sure to see this normalize into contango, where the farther you go out, the higher the VIX contract. And that's just not the case. And it tells you that the concerns haven't eased. And you might say, well, duh, we still have a war. We have with nowhere end in sight and no indication where we stand in terms of getting there. Taking a look at the expected move, I mentioned it. Let's double check it. And as I said, there is a triple witching options expiration this week. So you have a Friday morning expiration. That's not the one we want to look at. We want to look at the Friday evening 4 o'clock expiration. Again, 212 points. Makes a little bit of sense, given that the VIX declined a little bit from last week's 224. With options expiration, triple witching, an FOMC meeting, I was surprised more time that despite the small decline in the VIX, that we don't have a bigger options implied expected move. But then again, if you look at the SPX for last week, we did not. Where did we close? We closed the week. I think we moved about 100 points from 67.40 to 66.32. So the market was down 108 points, but from high to low, we did get that 24 points. So to be fair, we did get that movement, but we definitely didn't get anywhere near the upper edge of the options implied expected move. Speaking of volatility and what could help with it this week, taking a look at the economic reports coming out this week. Monday, we have Empire State Manufacturing, Industrial Production, Capacity Utilization. None of these are what I would call red star events. Tuesday, we get pending home sales and home builder confidence. That should be interesting. They're forecasting down 1%. Home sales have not been looking good. Wednesday, we get PPI for February and core PPI. This used to be right in a row with CPI the day after. I'm not sure if it's the whole government partial shutdown affecting it, factory orders. And of course, an FOMC interest rate decision in the afternoon with the Powell presser immediately following it. So that should add to the fun on this week. Although, again, I think that what's happening with the war is going to take front and center over an FOMC interest rate decision, which is all but decided that there's not going to be an interest rate cut, and we probably won't see one until Powell leaves the building. Thursday, jobless claim, Philadelphia Fed, wholesale inventories, and new home sales. So more indications on the housing market. And a rare Friday with nothing scheduled. Where's that rig count that we usually see on a Friday afternoon? In any case, nothing there. Coming up, the tail end of earnings season. As we wind down, there aren't a lot of companies that most people follow. We have Dollar Tree before they open on Monday, Lululemon after the close on Tuesday with DocuSign, and nothing really of note. Wednesday morning, General Mills, a stock that has just been pummeled. Macy's, Jabil Circuit, talk about the opposite end of General Mills. Jabil doing very well in the chip space. Micron, that one should be a very interesting one, heavily traded. This one is just all the way out. Red Cat, drone maker, see what they have to say. Five Below retailer. On Thursday, we had Alibaba and Accenture, as well as Darden Restaurants before the open. And then after the close on Thursday, we hear from FedEx is the one of the most important ones, and nothing really to speak of on Friday. So lots going on this week. Should be interesting. Futures open coming up in about 8 minutes. There's really not a whole lot here for people to do. You know, if you're buying the dip and not knowing the levels and not watching the price action, then you might be doing yourself a disservice. If you're in this market, you have to put in stops wide enough for the volatility and then follow those stops. But if you want to buy this dip, you buy a bounce, it works. Take your profits. If it doesn't, you're looking for either a bounce to succeed or a bounce to fail. If the bounce fails, you want to get out quickly. And again, wait for confirmation and build your positions slowly as you're trading them. In any case, it's a wacky market, and from the worst bear markets, and I don't mean a bear market in the intermediate or long-term sense. I'm saying we're in a short-term bear market because we're in a downtrend. You'll want to give the benefit in the short term to the bears, and you'll see some funky action come Friday with options expiration, and just play what you see and not what you hope to see, and you should be okay. Anyway, enough nonsense from me. Appreciate you watching. If you have any questions, at Trader Geek on Twitter, give me a follow. Trader Geek Sam in the trading forum, and I will see you next week. Thanks for watching, and have a great trading week. Bye-bye.